Are you tired of feeling like you're always one step behind the financial market? Understanding the advanced entry methods of the smart money concept can give you the edge you need to make successful trades. In this video, we'll be sharing valuable insights and techniques that can help you identify the best entry and exit points in the financial markets, and also we're going to show you the patterns and methods of smart money concepts that you need to identify high probability supply or demand zones and change of character patterns that will give you the edge and insight you need to stay ahead of the market. This episode will be a complete guide to how you will enter and exit trades in the market in a manner that enhances profitability and reduces risk exposure. So traders, if that's something you're interested in, please give this video a thumbs up to show your support and subscribe to our channel if you are new. See you after the intro music. Traders, so let's get started. What are the entry methods that we can use in the smart money concept? So SMC entry methods are divided into two major subcategories. The first is the reversal entry method, and the second is the continuation entry method. Also, the reversal entry method has two subcategories: change of character or market structure shift, and number two is the flip entry setup. So before we get into the detail of these setups, I want to make this clear: these entry methods should only be used in the higher timeframe supply or demand zones, because these areas are seen as having high probability due to the sponsorship of the higher timeframe, and anything outside of these zones increases risk exposure. So guys, let's start with the change of character or market structure. From the reversal methods, what is the meaning of the change of character or market structure shift? Change of character means that market has changed its trend or order flow over time and already consists of two types: minor and major change of character. Identifying a valid change of character is an absolute must-have for the smart money traders. You will endure some losses if you fail to spot a valid charge, so let's see how we should identify a valid change of character. Suppose we have a bullish market that price makes a series of higher highs and higher lows. In this case, each high and low is the market structure level. The most recent higher high and higher low is the one we monitor. Breaking the most recent higher low to the downward shows that price tends to go the downside and wants to change its primary direction, which we consider a change of character. The key point is, for having a valid change of character, we need price to break and close a candle below the previous market structure level. If price breaks the most recent structure with a shadow and closes into the most recent structure's range, then our change of character is invalid. The same concept applies to the bearish scenario, but there is a pro tip that you always need to remember. A change of character is valid only under one condition: that price reversed and came from a supply or demand zone before breaking the recent structure and creating the change of character. If price, without mitigating a supply or a demand zone, creates a change of character even with a valid candlestick pattern, we cannot consider it a valid change of character. For example, we have this bullish market where price makes these series of higher highs and higher lows. As you can see here, price created this change of character after it mitigated the higher time frame supply zone. So the next thing to look for is whether price closed below this higher low by the body of a bearish candle. If our candlestick pattern is valid, then we can assume that price wants to change its direction and the change of character is safe to trade. However, if price did not mitigate the upper supply zone, we would have a structure like this. In this case, if price moves to the downside, it will be rejected when it reaches the unmitigated order block and will start a fresh impulsive wave to the upside instead of changing its initial direction. As we have mentioned before, the change of character would occur in two ways: minor and major. So let's see what are the minor and major change of character. Imagine we have structures like these. In the right corner, we have the major chalk schematic figure, and in the left corner, we have the figure of the minor change of character. So guys, what is the difference between them? The major change of character occurs when price breaks the structure which has created a BOS. For example, as you can see here, the price has broken out this structure, which already created a BOS. On the other hand, as you can see, the price has broken out this structure which couldn't make a BOS. So here we have a minor change of character that we cannot confidently consider as a shift in the market structure. So here, if price breaks this structure to the downside, then we can confidently consider a shift in the market structure. I've seen so many novice SMC traders that they consider a minor change of character as a valid change of character. Instead of waiting for the price to create a major change of character, which provides a higher probability in the SMC trading setup compared to the minor one, and they mostly ended up with some losses, I have already started a backtest procedure with Trader Edge software for testing the major and minor change of characters in 100 possible trades for each in euro-dollar pair to see that which one has more win rate and provide high probability when we execute trades based on these patterns, and I'm going to share with you the exact results and outcomes of trades in the next episodes, so traders stay tuned for that. Now let's jump into the real chart and see more examples. So here we have the 15-minute time frame of euro-dollar on our chart. As you can see, price created a series of bosses to the downside until it reached this unmitigated demand zone, which is created in the higher time frame and then reversed to the upside. As you can see, the price has broken out this structure to the upside with an engulfing candle, so we spot a chalk. But before taking action, we need to ask ourselves a question: can we consider this change of character as a sign of a valid market structure shift? The answer is no, because price has broken out a structure that couldn't create a BOS. So guys, in this case, by appearing this minor change of character, we cannot be sure that a market structure shift is going to happen, so we should wait for price to make a major change of character. For having a major change of character, price must break and close above this market structure, which has created a bearish BOS. So traders, as you can see, we have a major chalk here that indicates the downtrend is over and a market structure shift is going to happen. So there is a crucial point that I want you to pay attention to. As you can see here, price has changed its direction to the opposite after creating a change of character. But did price respect the minor shock's demand zone, or is it respected major chalk's demand zone? It is obvious that price did not respect the minor change of character's demand zone, and if you had a buy order in that area, you would miss out on such a perfect trading opportunity, because price always has more tendency to respect the major change of characters instead of the minor chalk. Let's move on to the next example. So here we have a pretty strong downtrend that price created a series of bosses. So we see right here that price has touched the higher time frame's demand zone, reacted to it, and went to the upside in the following. Price has broken out this market structure and created this minor change of character because this lower high couldn't make a BOS to the downside. Most SMC traders consider this movement as a market structure shift. They expect price to change its direction to the upside, so they would place their buy orders at the highest point of the area, which is created by the chalk. But as you can see, market structure shift has not happened. Price did not respect the minor change of character's demand area, and stop loss of the traders who have entered into the market with long is hit by the price, and they ended up with some losses. So traders, this change of character analysis helps me have a higher chance of getting successful trades over just taking any trades without confirmation. So traders, in the following topic, I'm going to show you how to use the change of character to set up a trade. For using a change of character pattern to take trades, we can already use two different types of entry, one aggressive entry type and the second is conservative entry type. So let's discuss both of them in detail. So I'm going to start with the aggressive entry model. Imagine prices created this bullish structure to the upside. After reaching the higher time frame supply zone, price is rejected downward and forms a major change of character by breaking and closing below this structure, which has created a bullish POS. So based on this type of entry, in the next step, we should set a sell limit order at the lowest point of the supply zone, which is created by the change of characters wave to the downside, and also we should put our stop loss a couple of pip above the supply zone and target the most recent unmitigated demand. So this is the general schematic of Chuck's aggressive entry. Let's go ahead and see a real example. So here on our price chart, we have the Euro $15 minute time frame. As you can see, price created a series of bullish bosses until it reached the higher time frame supply zone. Price hit and reversed from this zone, also created minor and major chalks. So the next step in our aggressive entry setup is setting a sell limit order at the lowest of the bearish order block created by the change of character, with a stop loss couple of pip above the highest point of our zone, and we should target the most recent unmitigated demand zone as our take profit. As you can see, this zone is the closest unmitigated zone to the current price, so we put our take profit at this zone. Now all we have to do is wait for the price to activate our sell limit order. So our take profit is hit by the price, so let's move on to the details of the next topic, the conservative entry. But before we get into that, if you're looking for a reliable broker with incredibly low spreads and commissions, register with our trusted broker Hanker Trade. The reason we have chosen Hanker Trade as our personal broker is that we have faced no slippage while trading, even during the news. Withdrawals are smooth and fast, and there is nothing to worry about. Their customer service is 24/7 available with a super quick response and always willing to help you out no matter what your question is about. So if you want to experience an exceptional trading environment, check the link in the description. We use 2 separate time frames to execute our trades in this entry model: a higher timer frame for doing market analysis and a lower time frame for detecting possible entry confirmations and executing buy or sell orders. I prefer to use the 15-minute time frame for doing my market analysis, and then I zoom into the 1-minute time frame for executing my trades. But you can already use the 1-hour time frame as your higher time frame, and the 5-minute time frame is your entry time frame, or you can use the 4-hour time frame and 15-minute time frame. It is totally up to your personal taste, but the key rule you should always obey is that your higher time frame, which you would use for market analysis, must be larger, at least 2 times frame. Suppose price has created these series of bosses to the upside, and after touching a higher time frame, strong supply rejected and created this major change of character by breaking this structure to the downside. So what we're going to do in the next step is draw the supply zone, which is created by Chalk's wave. Then we will zoom into the lower time frame, wait for price to return to the zone and show us a major change of character. After creating a valid change of character, we should highlight the order block created by Chalk's wave on the lower time frame. In the following, we should place our sell limit order at the lowest point of the zone with a stop loss a couple of pip above the zone's highest point, and for the take profit we should target the most recent unmitigated demand compared to the aggressive entry type. The advantages of this type of entry are that this model has more confirmation setups and provides lower risk exposure by providing a minor stop loss and a higher reward to risk ratio. Let's go ahead and see a real example. So we have the 15-minute euro-dollar time frame on our chart. As you can see, price has created this series of bosses to the upside, and after touching the higher time frame supply zone, it reversed to the downside and created this major change of character by breaking the structure to the downside. Next, we should draw the supply zone created by Chalk's wave. So we have our confirmation on the higher time frame. So in the next step, we should zoom into the 1-minute time frame and wait for price to reach the order block zone and create a valid change of character. Again, as you can see, price has reached the zone, and in the following, price has broken out the structure to the downside and left an incredible inefficiency behind. So we have got the confirmation we were looking for. In the next step, we will highlight the supply zone created by Chalk's wave. Now we detected our point of interest, so next, we should place our sell limit order here, adjust our stop loss a couple of pip above the highest point of the zone, and target the recent unmitigated demand zone on the current time frame or on the higher time frame as our take profit level. Now we have executed our sell limit. Let's see what happens. As you can see, our sell limit order has been activated and we have entered the market. There's a key point you always need to remember when trying to use the change of characters in your trading. Chalks are the most effective when they break through 2 or more supply or demand zone, when they form after a higher time frame mitigation, when price impulsively breaks through the zones with few large candles. So let's dive into the details of the flip entry setup, which is the second part of the SMC's reversal entries. The flip entries are one of the best ways to hop in quick setup while the market plummets or soars, and flip is all about reacting to a significant zone and then breaking it. Now let's see how we can identify a flip. Imagine we have a bullish market that price has created a series of higher highs and higher lows. To have a valid flip pattern, first, price must get rejected from a higher time frame supply zone. Next, it should test the last demand zone and must be pushed to the upside and shows a rejection, but price should not create a new higher high and must break through the last demand zone, which is tested once and leaves a supply zone behind, which we call it as the flip zone. Price will test the flip zone once more, so we should keep an eye on it and put a limit order there. The same concept applies to the bearish scenario. There is a key point that you need to remember: if price had not reacted on the last demand or supply zone, there would not have been a flip. As you can see, the flip pattern is very similar to the change of characters pattern, but you need to note that in this particular case every flip is a change of character, but not every change of character is a flip. Setting up a trade with the flip pattern is very similar to the change of character, and we can use the same trading setups for both of them, hence we can use aggressive and conservative entry types to execute trades and flip zones. But before getting into the details of each, I would like to show you a quick candle breakdown of the flip pattern. This pattern is most effective when the price aggressively pushes away from demand and supply zones, rapidly breaks through the last demand zone and leaves inefficiency behind. If demand was strong, it should have reacted with more momentum and should have broken up the freshly created supply level. Instead, the last demand couldn't give enough rejection to push the price to new highs, so it turned out weak, which caused it to break. This means that the new supply zone is back in control, so we're trading the supply side of the market. So next, I'm going to show you how to use aggressive and conservative entries to place trades with the flip setup, so I'm going to start with the aggressive entry. As you can see, we have a valid flip pattern that price rejected from a higher time frame supply and couldn't make a new high, and after testing the most recent demand zone breaks it downward based on the aggressive entry. After identifying the correct flip pattern first, we should highlight the flip zone created by the wave which flipped the recent demand zone. Then we set our sell limit order at the lowest point of the flip zone and we will wait for price to activate our order. Also, we should place our stop loss a couple of pip above the flip zone and we should target the next unmitigated demand zone as our take profit. Let's apply these steps to the real price chart. So here we have Euro $15 minute time frame. As you can see, we have a bullish market that price has created bullish bosses, mitigated the higher time frame supply zone and reversed to the downside, and in the following price reached the recent demand zone and created a tiny reaction to the upside with these white candles, and then price was pushed to the downside and has broken out the zone with inefficiency. So we have a perfect flip pattern. Next, we should highlight the flip zone created by the wave which flipped the recent demand zone. Next, I'm going to place sell limit order at the lowest point of the flip zone with the stop loss a couple of pip above the flip zone, and I'm going to target the 1 hour time frame's unmitigated demand zone. Now that we have placed our sell limit, let's see what will happen. As you can see, our sell limit order has been activated and we've entered the market. So let's move on to the details of the next topic, the conservative entry. Imagine we have a perfect flip pattern in the 15-minute time frame that price, after mitigating the higher time frame supply, couldn't make a new high and finally flipped the recent demand zone after showing us a pullback. So first, we should highlight the flip zone created by the wave which flipped the recent demand zone. Then we should zoom into the lower time frame, wait for price to return to the flip zone and show us a major change of character after creating a valid change of character. Next, we should highlight the order block created by Chalk's wave on the lower time frame. In the following, we should place our sell limit order at the lowest point of the zone with a stop loss a couple of pip above the zone's highest point, and for the take profit we can target the higher time frame's unmitigated demand, or we can target the swing low of the current time frame. Let's see an example. So we have Euro Yen 15-minute time frame. On the chart, as you can see, price mitigated the higher time frame supply zone. It reversed to the downside and in the following price reached the recent demand zone and created a tiny pullback to the upside with these two white candles, and then price pushed to the downside and broke out of the zone and has left inefficiency behind. Here we have a perfect flip pattern. Next, we should highlight the flip zone created by the wave which flipped the recent demand zone. Now we have spotted the flip zone, and next we should zoom into the 1-minute time frame and wait for price to reach the flip zone and show us a valid change of character. As you can see, price has reached the flip zone, has broken out this structure to the downside and left an incredible inefficiency behind. So we've got the confirmation we were looking for. Next, we are going to highlight the supply zone created by Chalk's wave. Now we have detected the point of interest, so next, we should place our sell limit order here and put the stop loss a couple of pip above the highest point of the zone and target the recent unmitigated demand. Now we have executed our sell limit. Let's see what happens now. Our sell limit order has been activated and we have entered the market. As you can see, price after triggering our sell limit went down and finally hit our take profit and provided a trade with an 8 reward to risk ratio. So guys, we already have discussed reversal entry methods of smart money trading setup in detail, so let's have a brief explanation of SMC's continuation entry models. If you missed the change of character flip patterns or price action didn't give you an opportunity to enter the market, then taking a continuation trade is the easiest way to execute trades. Imagine we have a bearish market that price, after mitigating the higher time frames demand zone, has made a change of character. Now, by emerging a chalk, we know that sellers have lost control and we must look for a long opportunity. So suppose somehow you miss the change of character's entry opportunity, or you just want to open another long position. So how would you manage to enter the market? In this scenario, for executing long positions, you should wait for price to create a break of structures. Then you can place your order in the order block zones that the BOS has created, and you may target the next unmitigated supply zone. But there is a key point that you need to consider: you are only allowed to open new long positions until price has not reached the unmitigated supply zone. Let's see another continuation entry scenario. If price reaches the higher timeframe supply or demand zone, creates a tiny pullback, and after that breaks the zone, then you are allowed to enter into the market in the initial direction of the price. You are allowed to set a buy or sell order in the zone created by the wave, which flipped the recent demand or supply zone. So traders, we have discussed entry methods of the smart money concept in detail. In the following episodes, we will cover another crucial topic of the SMC, the patterns and tools, which you can use as confirmation for your entries. So stay tuned for that. I hope this video was helpful to you. If you enjoyed the video and want us to keep making more videos week after week, please click the subscribe button and turn on the notifications bell. In the comments section, let us know your opinions and tell us what topics you want us to cover, and we'll work our best to create more videos for you. So thanks for watching, and we'll see you in the next episode.